Good morning. My name is Alphonse Konjo Auro. My ID number is 2025 31040. Okay, I'm studying at the University of Papua doing third year in accounting, bachelor accounting. So at the same time, I'm become like an expert in explaining and advising people who have queries and who have confusion about how tax is all about now in different types of transactions. So I will explain a couple who have queries about taxation, tax, and on the different tax, on the different transactions that they've gone through and have done. So I will, especially Alice and his husband Albert, I will explain and become an expert in explaining tax on the various transactions that they've gone through. Okay. Firstly, for Alice salary worth of 50,000 is taxable, fully and subject to paying withholding tax. Okay. Two dividends for Alice, both person a couple has two children. Alice will be responsible for dividend rebates for Alice, and for Albert will not be responsible, but only for Alice. So Alice two children dividend rebates will be paid or will be deducted from salary and tax liability for Alice, but for Albert will be treated as normal. It won't deduct the tax liability. Okay. For school fee purposes, employer pays as freight benefits for Alice. Alice won't and Albert won't pay school fee, but the employer will be responsible. But in the future, benefit will be still be reported during financial year. Okay. Okay, business income for Alice 55,000 kina is taxable under personal income tax to be cleared in tax return allowable by 200 kina. Okay, increasing closing stock, beginning stock, closing stock. Okay, wastage paid to is auntie is taxable. It's taxable because it's based on genuine employment basis, so it is taxable. Okay, interest on deposit is based on accrual basis, which is taxable after it is received, but before that it is not taxable or unassessable under taxable basis. Okay. In 2024, subject to interest withholding tax. Okay, that's for the Alice on the queries about how tax is all about on different transactions that CS got through. Okay, now we'll move forward to Albert's situation about the tax. Okay, Albert's business income and deduction. Okay, Albert's business income of 300,000 is accessible in 2024 for tax purposes, because business is all about taxing. So tax will be deducted. 50,000 will be taxable, and tax papers will be executed on that business income. Okay, invoice income is not accessible for tax purposes in 2024, but will be accessible for tax while it is paid in January 2025. But in the case of using accrual method, it is still taxable in 2024. So in a accrual basis, when payment is received or when interest is paid, then it is taxable. But otherwise, it won't be taxable until there is payment and there is a clarification of payment and there is receipt from the from the receivable way of receiving payments. Okay. The superannuation contribution of 30,000 employees and 2,000, so 1,800 is deductible. The remaining 28,200 is non-deductible because it is not taxable under tax act. Okay. Unpaid annual leave 3,000 is not deductible until it is paid under tax rules. So it is not paid. Annual leave it's unpaid because payment is not yet received. If it is received, then it will be regarded as taxable leave fee, or it is not paid because of some issues. So they haven't paid. So to unpaid. This is so. Tax is all about any transaction that go on must be taxable. If not, it won't be allowed. Okay. Thank you for listening and may God bless you. Thank you.